All right, let's dive into one of the most powerful, almost magical forces in all of finance, compounding. We're going to break down how this simple idea works inside mutual funds to turn what feels like small, regular investments into some seriously big wealth over time.
I mean, it's the question, right? We all ask it. We work so hard, we try to save a little here and there, but how do you actually make your money start working for you? How does that tiny seed of an investment grow into a massive tree all by itself? Well, the answer is a concept some have called the eighth wonder of the world. And look, this secret isn't some crazy, complicated stock-picking strategy or some get-rich-quick thing you see online. Nope, it's much simpler. It's a fundamental shift in how you think about money, and it's a secret that's available to literally everyone.
Think about it. Most of us are totally focused on our income, right? How to earn more, how to get that next raise. And yeah, that's important for sure. But the real secret to building wealth for the long haul is shifting our focus from earning money to making the money we already have generate more money, all on its own. That's the heart of passive growth.
And the engine that drives this whole passive growth machine? It's compounding. Now, it might sound like some fancy financial term, but I promise you, the idea behind it is so simple and so powerful.
So here it is, in a nutshell. You earn a return on your initial investment. Simple enough. But then, and this is the magic part, you start earning returns on the profit you've already made. Your returns start making their own returns. It creates this powerful feedback loop where growth just keeps accelerating.
And this slide, wow, this really shows you the insane difference. With simple interest, your growth is just this flat, predictable line. But look at the right side. With compounding, that same investment, same time period, it just takes off. It grows to over 1,76,000 rupees. That curve you see? That's the magic of your earnings generating their own earnings. It's huge.
Okay, so how does this actually work inside a mutual fund? Well, it's all about automatic reinvestment. When the fund's investments do well, the price of your share in that fund, that's its NAV, it goes up. Now, instead of just giving you that profit in cash, the fund automatically uses it to buy you more shares, or units. So, your base gets bigger. The next time the fund earns a return, it's calculated on that bigger amount. And that right there is compounding in action.
So if compounding is the engine, what's the fuel? What makes it go? It's the single most important ingredient for this whole thing to work. And it's an asset we all have, but we almost always underestimate it. It's time. The snowball effect is honestly the perfect way to picture this. You know, when you first start rolling a snowball down a hill, it's tiny. It grows kind of slowly. But the bigger it gets, the more snow it picks up with every single turn, and suddenly its growth starts to accelerate like crazy. Your investment works the exact same way. And this chart right here is where that snowball effect just comes to life. Check this out. If you invest 5,000 rupees every month for 10 years, you end up with a very nice 11.6 lakh. But if you just double the time to 20 years, your wealth doesn't just double. No way. It explodes to nearly 50 lakh. That's almost 5 million rupees. I mean, just let that sink in for a second. You double the time and you get more than 4 times the money. That is the definition of exponential growth. It proves that with compounding, the really dramatic, life-changing wealth creation happens in those later years.
Let's look at it another way. A single 1 lakh investment. In the first 10 years, it grows by about 2 lakh. Not bad. But in the next 10 years, it grows by over 6.5 lakh. The growth in the second decade is more than triple the growth of the entire first decade. The longer you let that snowball roll, the faster it goes.
Okay, so we get it, right? The what and the why are clear. Compounding is awesome, but now for the most important part of all, the how. How can you actually put this incredible force to work for you, starting like today? All right, here's your game plan. 5 simple rules. Number 1, start early. Seriously, every single day you wait is a day of growth you can't get back. 2, stay invested. Don't panic and pull out. Let time do its thing. 3, use SIPs, a systematic investment plan. It's like putting your investing on autopilot. It builds discipline. 4, reinvest dividends. Use any payouts to buy more units and fuel more growth. And 5, diversify wisely. Don't put all your eggs in one basket.
Now look, there are going to be roadblocks, but for every problem there's a strategy. Worried about inflation? You need funds that aim to beat it. Bothered by high fees? Look for low-cost options. Struggle with consistency? We just talked about it. Automate with SIPs. Don't have a clear goal? Well, then you need to make one. Create a real plan. For every challenge, there's an answer.
This pretty much says it all, doesn't it? Every single day or month that you wait to start, that's a period of potential growth that is gone forever. You can't get it back. Your most powerful ally in this whole game is time, and it's a resource that's always taking away. So the power of compounding is right there, in your hands. It's not about being rich today. It's about having the discipline to start and the patience to let that snowball roll. So the only real question left is, what's your first step going to be?